The price to book for a company is 100. The price to earning for a company uh, is 20. The number of outstanding shares in a company is 1 lakh. What is the ROE of the company? What is the ROE of the company? And I would prefer you guys don't do any chat GPT. On chat GPT, you'll get the answer easily. Just try to use your brains so that you understand and try doing it. In exams, you won't be having a chat GPT with you. If you land into such kind of competitive exams or interview, you won't be having chat GPT. You'll have to solve in front of everybody. So this question can be solved very easily. You just have to remember one formula. Anybody, any guesses? Or you cannot calculate. The data is insufficient.
Sir, could you please tell us what is EPS or net profit?
If I tell you, like, you'll be able to solve, no?
Because in order to solve that, we at least need one fact, one of that, no, sir.
So we can say that data is insufficient.
Yes, sir, we can.
No, you
Because
cannot say it.
we cannot obtain by using PE formula or
Uh-huh. I won't go towards derivation. Maybe I'll share that. Maybe I'll share that whole chart for derivation with you. Right? ROE is a very very important metric. ठीक है, we tend to disregard ROE. हम ROE हमको लगता है कि बस कैलकुलेट कर दिया, ये कर लो वो कर लो. हाँ, it might be something out of purview of this session, but for all of you who plan to give CFA in future, anybody who is currently doing a CFA plans to do CFA? Okay, plans to do CFA. CA, anybody is a current CA, intermediate, कुछ वैसे are doing it? No? Okay. NISM, 15A. Not much in this, but more of in CFA and CA. There is a direct relationship between ROE and price to book. Whenever the ROE of a company is rising, the price to book will also rise. A higher price to book always doesn't mean the company is overvalued. If that higher price to book is being supported by higher ROE, it means that multiple is justified. One way to look at a price to book value multiple is I think we learned this formula previously. The return on equity minus growth divided by the cost of capital minus growth. If you recall, in the price to book value multiple exercise, we learned this formula. That price to book value ka formula can also be done as, instead of having the company's current price or having the book value, if you want to know the company's intrinsic price to book value multiple or the fair price to book value multiple, I'm saying fair, not the one you see on the, I would say, the money control or screener. The fair price to book value multiple is the difference that you see from the moneycontrol.com or screener. If you want to judge the company's fair price to book value multiple, the formula becomes the return upon equity minus the company's growth rate divided by the company's WACC, the weighted average cost of capital, minus the company's growth rate. You calculate that, you get the price to book value multiple for your target company. And if you calculate based upon this and you get the price to book value multiple as 5, and you go to moneycontrol.com or screener and the company is trading at a 10 price to book value multiple, it means the company is costly, is expensive. Right? And the vice versa is also true. So with this formula, now this formula has been derived via multiple calculations, multiplying, dividing, usko chodo. Let's come to conclusion directly. With this formula, we can clearly say that the return on equity will have a direct relationship with the PB. Both are in the same line, right? In the numerator and ye be in the numerator. And your cost of capital will be having a negative relationship with the price to book. The same as price to earning we learned. Higher the cost of capital, the lower the price to earning multiple is. These are tips and tricks I will keep on telling you now. थोड़ा ध्यान देना इस पे. And those who are not joining the session, because these चीजें they ask you in the interview, they'll ask you in a CFA question, they will ask you in your NISM question, they will ask you as a part of case study based questions also in interviews. These small things like which I'm telling you. Now, the cost of capital is having an inverse relationship. Via this formula we can see. And ROE is having a direct relationship. Growth we can say is having a direct relationship also. It's also having an indirect relationship also. The net effect of growth will cancel out. The net effect of growth will cancel out. If growth is having a positive relationship also and growth is having a negative relationship also, then will not the net effect of growth on the price to book value multiple cancel out? Plus 1 and minus 1 is 0. Isn't it? Yes or no? Agree?
Yes, sir.
Yes, sir.
Yes, sir.
So itna we are understanding the major parameters here. They tend to become ROE and the cost of capital because the growth is getting 0, right? Is getting cancelled out or nullified, right? ठीक है. Now, one way we can say is that a price to book is ROE by the cost of capital. In one way, right? We can say it. Can we?
Sir.
Take it. That's one part. Now, as I told you, like coming back to the main topic, ROE and the price to book are having a linear relationship. And you can always try to establish this relationship via a regression equation. ROE is equal to A plus B, that's your beta, into the price to book. Or like what can happen? Sorry, my bad. I just like interchange the relationship. Price to book can be established as A into ROE into beta. A plus B ROE, right? Because higher the ROE, higher will be the price to book value multiple. So here ROE becomes an independent variable. Ignore this line. मैंने गलती से लिख दिया था. हाँ. So ROE is a independent variable and price to book value becomes a dependent variable. So usually you will see on multiple websites, the company having a higher ROE will be having a higher price to book value multiple. This B represents the change in ROE, right? The slope of the ROE. So when you deep dive into the field of statistics, into CA models, CFA models, into the field of regression, right? थोड़ा सा like competitive exams पढ़ते हो, you land into this field, you will try to establish a kind of relationship between these variables. Now I won't go towards that formula. So when I combine this equation, right, plus this equation plus like this equation. So it shall become this part is equal to this part broadly. ठीक है. अब यहाँ पे you will do like दुनिया भर की calculations you'll have to do. ठीक है, that you used to do in class 12th. Right, divide this number by this on both the sides. ठीक है, multiply this number on both the sides, then divide. Huge table is there. After whole derivation, we get to know the formula for ROE is the price to book divided by price to earning multiple. Hence, the ROE in this case is 100 by 20. 5 is the ROE. So the data is not insufficient. ठीक है? So thus for your knowledge, you can recall that a ROE can also be written as price to book by price to earnings. Why price to book? Because ROE is having a linear relationship with the price to book. And why ROE? The price to earning? Because ROE is a multiple which is derived from company's earnings. ROE will be having a direct relationship with the price to book, but ROE might be having a lower relationship with price to earnings. Might be having an inverse relationship with the price to earnings over a long term, I'm saying. Over short term, they might work in the similar trend, but over long term, a higher price to earning might bring down the ROE. And why will the price to earning be higher? Because EPS will be low, earnings will be low. And ROE is an earning driven number. It is profit after tax by the outstanding shares. If the earnings are falling, the ROE will be low. If the earnings are rising, the ROE will be high, right? If the earnings are rising, your price to earning will be low, right? Or we can further say this, as ROE can also be written as what? Price to book. Price to book into, see, if ROE is having an inverse relationship with the price to earning, won't it have a direct relationship with the earnings yield? Earning yield क्या है? It is the inverse of price to earning. Earning yield is the inverse of price to earning. 1 by price to earning is the earning yield. Correct? If you divide this by 1 by price to earning, won't it be the price to book into the earning yield? बात तो एक ही है. 1 divided by 1 by price to earning is a reciprocal. ऊपर ले जाओगे, simple maths. Price to book into earning yield.